Hi, I'm Steve Currington, mortgage banker, and today we're going to talk about, should I pay points? Discount points. Most people don't know what that is. They're like, what's a discount point? What does that really mean? So I'll explain it super easy layman terms. If the interest rate that you can get today, let's say you have a really good credit score and you're putting 20% down, and let's say your interest rate that's available today is a 3% interest rate. I'm just making up a number out of my head, 3%. Then there are ways that you can get a lower interest rate by paying more fees. And that's all that really comes down to. You might have a 3% interest rate that comes at like no cost or no discount points, but you might be able to get down to a 2.75 rate by paying additional closing costs. And all that is additional closing costs. These are not costs that you can get back. And so if you're doing a mortgage and you're paying points, then you have to make sure that the payoff is worth it. Let me give you an example. You might lower your rate from 3 to 2.75. But if it saves you $100 a month, which it's not likely to do that, but let's say it saved you $100 a month and it cost you $4,000 to do that, then that would mean your break-even point would be 40 months, right? So if you're buying a house and you're planning on living there for 2 to 3 years and then selling it and buying something else, the average person lives in a house for 6 or 7 years, then you got to consider that when you're paying points, because beside the fact that you'll be able to brag to all your friends when you're having a beer around the campfire about how low your rate is, you may not actually be saving money. So be very careful, because some lenders will quote you a really low rate and you'll go, oh my gosh, their rate's 0.25% lower than everyone else. Well, look at the closing cost, because they may be quoting you, and a lot of times they're quoting you an interest rate based on you paying points, not based on you paying no points. And if you're comparing my rate at no points to someone else's rate at points, any lender, you can pay points to get a little bit lower rate. You can pay additional closing cost to get a lower rate. It's just not always worth it. So you want to make sure you do the math. I had a couple a few years ago that their break even was year number 12. And I said, you got to think you're going to be saving $47 a month starting on year 12. And so if you're going to be in the home for that long, then great. If not, any year before that or month before that you sell it, you're actually losing money. You're not saving any money until you get to that point. So be very careful about paying points. I'm not a huge fan of it. Believe it or not, your lender makes no more money if you pay points. So we're not incentivized to charge you more closing costs or to do anything like that. So if you're paying points, make sure you do the math and make sure you figure out what your break-even point is. I'm Steve Currington. If you want more information, you can visit stevecurrington.com or call me at 918-281-5475.